Closing market comments for Wednesday, January the 20th. Markets opened lower last night, again filling the gap that we had in corn from last week, and we went down and tested that gap. Grains were sharply lower at times. Corn down 13 to 14 cents, beans down over 30, and wheat down about 15. So we did see quite a bit of pressure on them. After the break, we did see the markets rally back, and they got close to unchanged in many cases. But we did close lower for the day, with corn down 4, wheat down 6, or beans down 16, and wheat down 5 cents on the day. So probably a good sign that we had this market sell-off and a little correction. The market was way overbought by the funds. As of last week, we had record position of 435,000 long contracts in corn. So good situation to have a little offset here. The old saying, you can't have everybody on one side of the boat. So we'll see whether the market can continue to rebound after today. Not a lot of news out today in the markets. China did announce that they had increased corn imports last year from 7.2 million tons projected to 11.3 million metric tons. Their soybean imports from the U.S. were 25.89 million metric tons. That's up 52.8% over a year ago. And in Brazil, they were at 64.28 million metric tons. That's up 11.5%. So you can see demand on soybean meal in China is up substantially. We continue to see increases in the hog numbers, getting the herd back up to where it was before the African swine fever, and increased poultry herd as well. Malaysian palm oil is at the lowest price it's been in 2 months. Did put some pressure on the soybean complex. March futures, as I said, did fill that gap, so a little bit positive there. The Chinese yuan is at the highest level against the U.S. dollar it's been in 2 years. That's partially because the dollar is lower and the yuan is higher. But we still have the issue that the Brazilian real is getting cheaper again against the dollar. Funds on Tuesday sold 25,000 contracts of corn, 20,000 contracts of beans, and 2,000 contracts of wheat. That puts the estimated corn position at 389,000 contracts long, so still a substantial long position. One other note, Mexico announced a week ago that they were going to quit using GMO corns. They want to go all non-GMO, and they did say yesterday that the U.S. corn that we ship to them for feed would have to be non-GMO as well. This is a 3-year transition. But it could have an impact because Mexico is our largest customer for corn today. So we need to have that, look into that and see where that's going to go as we go forward. One other note, Lion City, Iowa was reported last night an 80-acre farm sold for $16,800 an acre. I assume that guy thinks these grain prices are going to stay for a long time. Thanks for watching. Have a good evening.